very positive, even though gold prices are going down. I'm very, very, very positive on it. They're saying gold prices are going down because inflation is going up. What do you, not inflation, interest rates.
Interest rates, yeah.
What are interest rates in the United States? Well, about 3.5, 3.75. Yeah. I started buying gold. Again, it's in my book, Trend Tracking. About $65 an ounce back in the late 70s. You know what the interest rates were back then?
Yeah, like 10 plus, right? 20, almost 20%.
Yeah. So no, gold is going down because the markets are going down and people need the money. They boomed up the markets when gold hit almost $5,600. A lot of people were playing it. They had to take that money out to cover their losses. So gold is the number one safe haven asset in the world. So I'm very positive on it. And as for what can happen, there's a quote, "It does not take a majority to prevail, but rather an irate, tireless minority, keen on setting brush fires of freedom in the minds of men." That was by a cat by the name of Samuel Adams, one of the founding fathers of America. When the revolution happened in this country, less than 5% supported it. We have to unite that irate, tireless minority, keen on setting brush fires of freedom. That's the way I look at it. The markets were crashing before this was going on. One of our top trends for 2026, dot-com bust 2.0. They overinvested in American companies in the AI. AI is wiping out a lot of the software companies. The private equity groups, that people want their money back, one after another, they can't get it back. The markets were going way down before this. China's going to lead the world in AI, and India number 2. Again, going back to Bill Clinton, before China was brought into the World Trade Organization, thanks to him, 25 years ago, 10% of Chinese 18-year-olds went to college. Today, almost 70%. They're very AI, high-tech addicted. There's going to be a dot-com bust. You're looking at the people want their money out of these private equity groups that lent out all this money. They can't get it back. You're looking at the AI taking out, again, a lot of the software companies. The crash was already happening. The markets are going to crash. This is going to be not the Great Depression, not the Great Recession. It's going to be the greatest depression if this war doesn't end. And people keep calling it a conflict. It's a war. It's a war. Number 2, or number 3 or 10, the equity markets were way overvalued before any of this happened. There had to be a correction in it. The Magnificent Seven, remember that? Driving them all up. And now you're looking at what's going on with the energy prices, as you're talking about. Let's look at the equity markets before they were going down. Look how they were spiking in Asia. They were spiking, beating out everybody around the world. Oh, how much does Taiwan have to import oil? Oh, about 98%. Japan, about 98%. And they can't get it. This is serious. This is going to be, and it's not going to be stagflation that they're talking about. It's going to be dragflation. Stagflation is a stagnant economy. The economies are going to go down and inflation is going to go up.
Let's start with the difference between inflation and hyperinflation. If I walked into your closet today and for the next 30 years, I took one button a day. At the end of 30 years, I'm going to have all your buttons pretty much, but you're probably not going to notice it. It might be an inconvenience, right? You might need to sew on another button. And as long as you have those buttons that you can sew on, okay, you can still wear all of your clothes. But if I walk into your closet today and tonight I take 98% of every button that's in your closet, number one, you're going to notice it tomorrow. And how many buttons do you have put back? You were talking about not being able to do investments, But there are people in the US that have to borrow in 4 easy payments to feed their family. And the fastest growing area in short-term debt is to pay basic bills, because the definition of price stability of central banks is different than what you and I would think. For me, if you say it's a stable price, that means that gallon of milk stays the same over time. But for central banks, it's that they can get that gallon of milk to cost more over time, but slowly enough that you still buy it. But hey, when you can't afford that gallon of milk, maybe then you go to powdered milk and water. But oops, the water's being used up by those large companies that have lobbyists that are ahead of the line where you and me and the general public are. So the difference between inflation and hyperinflation is that it happens more quickly and you notice. And when you notice, even at what they're going to say is a 5% rate or 4% rate or 10% rate. I mean, they jury rig everything. So, all right, maybe caviar isn't going up as fast as ground beef is, but that's in the same mix because they're both food. So, are we real? What is your personal experience? That's what people have to recognize and start paying attention to, because that's when you can see it better. If you don't track it and it happens slowly, it's still happening. You just don't know it. But now we are at the end. And 2008, interbank lending. So that's bank to bank lending. It's the confidence that if they loan this bank money, that they'll get that money back. Well, that was gone. They don't even report that anymore because it's way more convenient to just not show stuff because then nobody can see it, right? It's not enough that most people don't know where to go. But then in 2015, with the Swiss surprise, which was really a big deal, most people don't know this, but it was central bank to central bank confidence. Because especially since 2008, and you'll see this again, that's why I need to bring it up. But do you remember all the discussion of how global central banks were synchronized in their battle here? Yeah, they had to develop a new system because the old one died, and they had to come together to do that, and they will too. I think this will be a global reset. I don't think it's going to be a country, one-off country coming up. So we'll come back to that. In 2022, and this shocked me, when the central banks had been using forward guidance, in other words, telling Wall Street, telling the banks what they were going to do so they could get into position to benefit. You and I can't, but the rest of them, they could. And then all of a sudden in 2022, where they were saying 0.5% move, they did 0.75% move. Gone. That confidence gone. Markets know, and markets have taken a lot more control since then, haven't they? So it's pretty interesting to watch, but that means there's one layer of confidence left, and that's public confidence. Now, there was something that came up while I was on vacation. I did not have time, and I just got back the other day, so I have not really had time yet to dig into much of anything. But in this article, I think it was from the Wall Street Journal, they were talking about the loss of confidence at the highest level ever. Or in other words, people have low confidence. I got to dig into that, because if that is indeed true, if I can find that data and prove it, I'm telling you right now, the clock is ticking, because it's that public confidence in the system that's keeping it together. And it's the credibility of the central bank who's fighting inflation. But no, they're trying to control it, but we're at the end. This is a trading economy. When you hear companies that are worth $800 trillion in market cap, that's not because that company is worth that much money. It's because this currency is worth that much less. And that's the only tool. That money printing and that money creation is the only tool that they have, and it costs nothing. It's not me saying that this stuff has no value. Look at the purchasing power chart, and there's a big fat zero on the end, and we're not far from that. And that's the Federal Reserve. And the reason why this isn't worth anything is because it's used in one sector. So if demand goes away, and the power is definitely shifting away from the US, that passport isn't what it once was. Our clout in the world isn't what it once was. I mean, that's a problem for this stuff, because what creates it and supports it is the full faith and credit of the government. So that means as long as you trust them, you'll keep loaning them money. Uh-oh. So what does that look like when all confidence is lost? Then why am I working for this? I'd rather put it in this, but they don't want you to put it in sound money, because once you do that, it's out of the system. The only thing that they have is to manipulate the spot price, which they don't call it a spot gold or a spot silver contract. They call it gold and silver, so that you think that that's what gold and silver is worth in terms of dollars. But that's the lie. And the problem that they're having now, and this shift started over a year ago, it was a year ago in January. I'm sure we talked about this. I know we talked about this, is that the demand for the physical metals, whether it's silver for AI and all the build outs or what have you, it's a strategic metal. China is no longer exporting it, but it does get used up. Or it's for gold, with massive demand from global central banks, not developed nations, because after all, they have this stuff. It doesn't mean anything. But they're buying more gold and have been since, that shift actually started in 2005.